What's going on, everyone? Welcome to the YouTube channel here. My name is D. Anthony with Evolution Traders. In this video, we're going to look at the NASDAQ 100. So, a lot of things to talk about here. Market still continues to be in a lower bottom half of the range. Okay, we've had some extended selling going all the way back to July the 11th. That's when we put in those highs of 20,983. What does that mean for us currently? Okay, right now, if you're a day trader or a scalper, it's a little bit difficult because the ranges are big. Okay, and when I mean big, you're getting 5-minute candles that are 60, 80, 100 plus points. Okay, that's very, very hard to manage risk, especially if you're trading mini contracts. Now, I trade mini contracts and it's been extremely hard. There's been instances this week where I've been in a trade in down 300, 400, almost $500, and it's still technically in play, meaning that there's no technical damage that's been done physically to my trade. It's still oversupply, it's still over demand, or it's still below supply, still above demand, depending on if I'm long or short. It's just the range, right? The range, the average true range of what we're getting in the market right now is huge. How can we deal with this? First things first, let's switch to micros, okay? We're not going to make as much money when we do win, but it's going to definitely protect and limit the downside. If you're not okay with that, then you're not okay with adjusting as a trader, okay? Because every day trader will tell you, depending on your account size and how much money that you're managing, you have to do what's best always for your account. Okay, so a lot of people who are trading prop firms, you guys are on $50,000 accounts, $150,000 accounts. Again, the drawdown's not that much. We're talking about $2,000, $2,500, $5,000 worth of drawdown. That's not a lot in terms when you're talking about trading 1, 2, 3 mini contracts, and this thing can whip around on you in minutes. I mean, I'm sometimes even 30 seconds, right? This thing is moving 30 handles, points. This thing is moving 25, 30 points in a matter of 10, 15, 20 seconds. Trade micros, you're going to watch that stress level come down. Now let's get into this chart. The daily chart, we put in a bottom. Whether this is going to be the end of the road is way too early to say, okay? Right now, where we are at and what's going on is we are in active motion in a dead cat bounce. Extended selling from 20,983 all the way down to 17,351, okay? Extended selling. Now we're getting a little bit of a dead cat bounce. We got one here as well that happened at the end of July, where we had a little 3-day dead cat bounce into the 50-day moving average. Ever since we've lost this 50-day moving average, the pressure has been extensive to the downside. Okay, so could we go on another little bit of a rally? Yes, and in fact we can. If we can, in the overnight session and pre-market, to kind of cap off this week, if we can get over the 10-day moving average and we can start clearing out prices of 18,617, we've got room to kind of push up into the 900s. That's another 250 to 350 points away. I can see that happening. That's going to be our next macro area of resistance. These bulls are not by any means out of the water until we close over 19,565. That's the 50-day moving average. So until then, again, you can trade to the long side. And I would definitely recommend trying to get in on this bounce because you definitely want to take part in it. But just be cautious, okay? Just be cautious. If we do, going into next week or even the following week, we keep continuing to bounce and we get as high as 19,200, 19,500. And it starts to reject and you start to see, here we go back again in that consolidation holding pattern, and it starts to lose this 200-day moving average again. Look out, okay? That's going to be the second leg down. Okay, this is the first leg down. Okay, this is a first leg down here. Actually, you know, you can almost call it the second leg, because the first leg came into the 50-day moving average, lost it, tried to bounce and reclaim it, got rejected. So this I would consider leg 1, dead cat bounce, leg 2. So if there's going to be a completion, normally there's 3 legs down in a completion pattern. Normally, now that does not mean, because again, if I go back to the last time I remember we had this type of extreme exhaustion selling, was back in the pandemic and COVID. We drastically declined. And then when everyone thought it was going to continue to go lower, all of a sudden that was it. It took off and it never came back. That can happen as well. A little bit different circumstances. I would need to see something, Fed come in and drastically slash rates for that to happen. We don't have a catalyst for that to happen. So until we have a catalyst for that to happen, I'm going to definitely be looking at this to kind of continue to bounce and kind of churn into these upper supply areas, 18,900, 19,000, and kind of see what we do from there. I'm going to take every day, day by day, right? I'm not going to expect much. I'm not going to really participate in the open where I'm trading the first 5, 10, 15 minutes of the market. What I'm having more success on is trading a little bit later in the day, after the first 30 minutes, after the hour, especially after the first hour. Again, if you guys remember my videos going back to a couple of weeks ago, I told you guys I wasn't trading anything in the first 30 minutes. Well, I'm still doing that, but I've taken some trades with inside the first 30 minutes. But now I'm also noticing a lot of the better winning trades where the volatility and the ranges are a little bit smaller are coming after the first hour when I'm allowing some price action to develop. And that's actually being a little bit easier for me, is actually letting the first hour go, right? Maybe taking one scalp here or there, but realistically looking for my moves, my reversals, or my continuations after the first hour. In our room at Evolution Traders, we're playing the 30-minute opening range. Yet again, today it paid. So we're taking that 30-minute opening range. We're looking for that level. We're eyeing that level. We're keying that level. We're scalping it for anywhere between 5 to 15 points. Okay. Now we're also playing 20 SMA plays, and we're also looking for those tops and looking for those reversals off of upper supply. 1 hour chart has been huge for me, and I know a lot of people in the room lately. The 1 hour chart, make sure we're taking trades in line with that 1 hour chart. We don't want to be going opposite of what the 1 hour chart is doing. That's going to kind of protect you a little bit more as well. Again, if we do lose today's low, that would be a confirmation through the 200-day moving average. I would look for the short back down into the 17s. The upside, I'm looking for 18,850, and then I'm looking for 19,000. Those would be the two upside moves there. So let's be cautious. Let's make sure we size down. And there's nothing wrong with trading micros. Anything between 2 and 3 micros will suit you just fine in a market like this, where it's moving 20, 30, 40, 50, 60, 70 points in a matter of 5 minutes. With that being said, make sure to like, comment, subscribe. Guys, we are on the road to getting this channel to 10,000 subscribers. This is going to be my 4th year on YouTube teaching, educating, trading. Help me get to 10,000 subscribers. I'm going to do something really, really big for everyone once we do get to 10,000 subscribers. If you guys want to join Evolution Traders, that link is down in the description box below. Also, if you guys need to add more evaluation accounts through Apex right now, 80% off, that link is down in the description box below. Go pick up 2, 3, 4, 5 accounts. Remember, invest into your business, okay? Because even if you're funded, and let's say you have 5 funded accounts, you need to constantly be working on evaluations, because at any one given moment in time, you can go on tilt, you can lose an account, something can happen, you can do something stupid. You need to consistently keep growing your Apex portfolio until you get to 20. Right now, I passed another one today and I'm at 9, okay? I've been taking the prop firm space a little bit more serious this year, and I'm just gradually kind of just increasing. So I'm at 9 total funded accounts. I'm looking to hammer this home into 20 before the year's end. I just opened up a couple more today. So I like to pass one, and then buy another one, and then pass one and buy another one. I know some people in my room like to buy 10 of them at one time and then just, have them all in the bank. Different strokes for different folks, whatever works for you, but I'll see all of you guys on the next video.